Hi, and welcome to the Market Alert for Thursday, 7th of April 2022. So the Fed's Volcker moment slams bonds, stocks and cryptos and crude. The Fed needs to crash the market to slow and stop inflation, according to this headline. Well, if they want to do that, they can do that in an instant. It won't take a lot to do. And I look forward to it if they do it to stop inflation for all of us, but we'll wait and see. But that seems to be the agenda there, as it says in these headlines here. FOMC minute signal better, faster than expected QT, multiple 50 basis point hikes. That's obviously what Brainard leaked on Tuesday. Yesterday evening they then sort of announced this during the FOMC meeting minutes. Significant risk was that elevated inflation and inflation expectations could become entrenched if the public began to question the committee's resolve. So they're trying to appease everybody now by saying, look, we need to stop inflation, so we'll have to go for the 50 basis point option instead of a quarter of 1%, which is a bit ridiculous, isn't it, when you consider that when you don't, outside of the massaged and manipulated figures of the Fed, inflation is running around 17% and they're increasing rates at a quarter of 1%. I mean, it's never going to do it, is it? As I said the other week, it's like trying to put a house fire out with a cup of water. It's just not going to happen. So, according to the FOMC meeting minutes last night, the interpretation of them is to crash the markets and to raise rates, and obviously faster than expected QT as well. Also, Biden's booming economy is just another front in the media's war on reality. Of course it is. Anybody with half a brain cell knows it's never been right since 2008. It's just been smoke and mirrors, QE money, trillions of it, just to keep the illusion alive. And of course now it's got away with them because of the hyperinflation situation brought about from the COVID pandemic, when Trump printed $7 trillion and $3.5 trillion of that was given to the American people to spend in their stimmy checks. So yeah, the chickens are coming home to roost. Reject the evidence of your ears and eyes. Well, I could say that for a lot of subjects, to be honest with you, but let's just keep it on topic here. So yeah, good headlines this morning, actually. News today, what have we got? Nothing really. Bullard speaking at 2 p.m. Oh, Yellen's back out again at 3:30 as well. She managed to buoy the market up a bit yesterday afternoon with whatever she said ahead of the FOMC meeting minutes, but then it fizzled out, if I recall. And finally, the gold-silver ratio heading to the upside. Yesterday, silver managed to move up, but it's going down. I still have no doubts about that. We're going back up to these levels on the gold-silver ratio. Once more, I can't see anything other than heading up to here at the moment. As I've said so many times, we have a war, we have hyperinflation, and the price is still being depressed to 50% lower than 1979. Let's have a look at the Dow. It's in here somewhere. It'll be the last one, of course. There we go. So the Dow yesterday moving lower on the rumours of the FOMC and what Brainard said the day before. So no up move, market down, and now we've taken out the 50 and the 20 bar. We've got the 50 EMA, the 20 bar moving average. We've taken out the 78 and the 89 as well. So now we're heading down to yesterday's low. And we're doing that on the overnight market at the moment. Downside targets are going to be from here up to here. So we're just coming through 38. 50% is the next downside target for the Dow. Let's see if they want to crash the markets then, because they have the power with which to do this very, very quickly and swiftly. Otherwise, it's going to be a slow grind. But we're already, like I say, through 38. 50 is the next downside target. 30-minute charts. There you can see yesterday morning the futures market down. Yellen starts to speak. Market manages to recover. Then we get the FOMC, and that's a big swing. That is in the market. Just have a quick look at this just to get an idea of what the range of this bar was. Broadly speaking, within 30 minutes the market travelled up and down just under 300 points, and then 200 in the next bar, 150 in the bar after this, and then finally another 100 points, another 150 points. Market moving lower at the moment, as you can see there. And speaking of the low, this is where it's very important in that daily chart that the market actually holds down at this low. At the moment we've got a bit of demand and trying to move back to the upside. Oversold at the moment. When we get a day like yesterday, it's not uncommon for the market to actually scream all the way back the following day as well. So today we've got to be vigilant on which direction it might take, because at the moment it looks like we could actually fall out of bed, and we could, but there are situations like this where it actually puts in a reversal back to the upside, which is why I will go from there to there on the upside, and also keep an eye on these numbers as well. What generally is the case that you've seen a million times is that the low gets tested, the low holds, and then the market can reverse back up as well. Just depends what the orders and the agenda is there. In the German DAX, a similar picture, a bit weaker yesterday for the DAX. The market having traded through 78 and 89% retracement, which was here. Again, we need to draw in some new fibs to the downside. These are the new areas. We've got 62% and 50 there. 50 is where the market's currently trading. And again, yesterday's low is going to be very, very important. Again, just in case they move the market straight up from the open of the cash market, these are the upside targets for the DAX as well. So at the moment we're sideways to lower. We can see that in the 30-minute chart as well. Again, we've got this low, and the market needs to hold at this level. Yesterday it sailed through it, big style, and then continued down to the S3. When you get to the S3, 99% of the time the market will stop. Yellen spoke, market came up. We had the FOMC overnight, the market's drifted lower. We've got a situation here where the market's put in an 89 and it's oversold at the moment. Again, attempting to move to the upside back towards the DP and the 50 EMA. Your time to watch this would be 7 a.m. and then 8 a.m. when the cash market opens. Yesterday we started off moving to the upside. We were overbought. We had a retracement, and then the market moved to the downside, and then continued to stay below the 20 bar moving average, apart from here where we had a bit of a bounce where the market came up 50 points and then sailed down again, staying below the 20 bar moving average. Again, just coming to the 20 bar moving average, down, back to the 20 bar moving average, and down until we got down towards the S3, which is just here, as I say, 99% of the time. Cluster of volume here coming into the market from Yellen as the Dow opened, and then Yellen speaking, moving the market back to the upside there. And then overnight you can see that prices have been after the FOMC meeting minutes, which is here, and then overnight they're just in a bit of a range here at the moment of 50 points. But the key area to watch here is the low, and this needs to be held if the market is to move to the upside. If not, then like I say, you'll need to look at the downside numbers. On the upside, you've got these fib retracements and resistance areas here. In the currencies, the yen showing a bit of supply for yesterday. You can see that here in the daily chart, sideways to higher at the moment. So the dollar's strong, moving to the upside. So a bit of a choppy one for the yen yesterday. And then, of course, the FOMC meeting affecting the dollar and the yen. See, here's the low that's been tested for yesterday, oversold, just oversold on the one stochastic line there. Market then moving to the upside. Need to take out the DP and the close in order to move higher. In the pound, the market showing a bit of strength after DP demand yesterday, and the stochastic starting to move up as well at 89% retracement with divergence there as well. So if the pound is to move to the upside, then we've got to have some resistance in these areas here for the pound if it attempts to move higher. Of course, in the 30-minute for the pound yesterday, the market moving up to the DP, becoming overbought, crossover in stochastics, market retracing, and then moving back down to where it started in the morning when the FOMC meeting minutes were announced. 50-point range in this FOMC news bar as well. So obviously affecting the market quite dramatically there. Retracement there. We've got divergence as the market's coming back, even though the low is retested, and sideways to higher at the moment as the market waits for the open, or the main traders to open the European markets for the Forex. And finally, in the metals, silver already down. It managed to come back yesterday with a bit of demand, but again, not being pessimistic, just being realistic. 200 MA is going to be in the gun sights if the stock market moves sharply lower today, for certain. And again, also yesterday's low, which you can see there at $24. The $24 area will be attacked. Now, interestingly enough, despite the moves to the downside at the moment in this market, there seems to be a floor around the $24 level, so it will be interesting to see when this is retested, which it's likely to be as well. Bit of a bounce there at the moment because we're oversold, and you can see the support yesterday in the FOMC news down at this level, which is why prices are attempting to come back. If it wants to move higher, great. But if not, like I said, I'm prepared for the market to come down to the $24 level. Meanwhile, gold also weakish yesterday. A lot of demand for gold yesterday, though, held quite nicely, but I suspect that's to do with the FOMC meeting minutes. Narrow range, which is why you're seeing the gold-silver ratio move to the upside. And we've got prices sideways to lower there for gold overnight as well. And the dollar continues to move. We got some supply yesterday, market struggling to move slightly higher, and you can see they're turning over a bit on the overnight market as well. And finally, in the crude oil market yesterday, dropping down below, I think, well, the nearby contract dropped below, there you go, this one did as well, 99.77. So back below $100 a barrel, which is great because that'll ease some of the energy fuel inflation. But it's not selling off anytime soon. So I should imagine that we'll get into a bit of a range and consolidation phase as the war drags out, and will continue to drag out for many months, if not years, would be my analysis of what's going on at the moment. Okay, that's it for this one. Let's see what Yellen has to say today, and let's see if the markets do continue that weakness on the prospect of several 50 basis point increases in interest rates to try and slam inflation. Well, good luck, Powell. But as I say, let's see what happens today. Okay, that's it. As ever, thanks for watching. See you in the next one.